We've got a couple of nice prints today, very, very important, quite a bunch of them. First off, the balance of trade in the US. It's gone down, which is not a good thing. This is a figure that not a lot of economists pay attention to, but it's something that in the long run it might become important. The reason for that is that the balance of trade is the difference between your imports and your exports. And the US is in a deficit, which basically means that they're importing more than they're exporting. And this is sitting on 72 billion a month. So the figure that came in now is basically minus 73.3 billion. And the previous month was minus 65 billion. So they've basically gone more into the deficit. The US has always been in a deficit since like 1975. They've been in a deficit, but it's just getting worse and worse. They're just going more and more into a deficit. So the US is pretty much the only country that can actually afford to do it over such a long time frame. And the reason for that is purely because they're on the reserve currency. So they basically just print the problem away. And the problem can come in when that opportunity is no longer available. It might happen where the US is no longer the reserve currency, because there's a lot of things happening that might cause something like that to transpire. And then the balance of trade will become a very, very important figure. If you look at the imports, for instance, and the exports, you can actually see that the imports in the last sort of 4 months, there's sort of been a bit of a trend line that formed where your export has gone up and now it's going down. So it sort of was good 2 or 3 months ago, but now it's turning around, and the imports is the other way around. The imports have dropped a bit, and now it's going up a bit, which is, not good. So that's something to pay attention to in the long run. That might hurt if a lot of companies start dumping the dollar. So at the moment, a lot of companies trade with the dollar, even though none of them is the US. If they stop trading with the dollar and they stop buying oil in the dollar, then this is going to become a big problem. So another nice print we got today was the initial jobless claims. So the initial jobless claims, it's been pretty much flat. So it was sitting, the previous figure was 218,000, and now it's on 217,000. So it's sort of flat. We actually want this figure to go up. So that's the when people file for unemployment for the first time. So this figure has just been static. We want it to go up because that indicates that the economy is slowing down. And that will basically tell the Fed that they shouldn't hike interest rates as much, which is sort of a good thing in a sense, obviously, because that means inflation's under control, but also a bad thing because it means we might be going into a recession if this number goes up. Then we also got 2 PMI figures. So the PMI figures is just basically a measure of the economy. It's almost like a mini GDP figure, but month over month. So the PMI figure, there's a composite, which is basically our manufacturing plus your services added together. A figure above 50 basically means that there's growth. A figure below 50 basically means there's shrinkage. So this has been trending downwards in the last couple of months, which basically indicates that we are sort of heading towards a recession. And these figures are below 50, which means there is a shrinkage. But there's also 2 releases. So there's the S&P that releases a figure, and then there's the ISM that releases a figure. So the S&P figures for the composite last month was 49.5, and this month is 48.2. So that's gone down. Then for the services, that's just the services side, not including manufacturing, that was 49.3, and that's gone down to 47.8. So you can see that the service part of the economy has gone down more than the manufacturing part. Then there's obviously the non-manufacturing PMI, but this is from the ISM. That sort of reflects the same thing. This one's still above 50. This is basically 2 institutions that release these figures. That one is still at 56. It was 56.7. It's dropped to 54.4. And then there's also the factory orders, which is also a fairly important figure. That's sort of been a bit flat. That's just any orders placed with factories, but this is purely goods manufactured in the US. That's also sort of been flat, but in the long run, it does have a bit of a downtrend. So that is going down a bit, which is, like I say, if you look, depending on from what angle you're looking at it, at the moment we actually want it to go down because we want the US economy to slow down. Then, yeah, that's basically the US. So Canada's also released a balance of trade. Theirs is actually very good. They've actually increased their balance of trade. They're sitting at just above $1 billion now, positive, so they're not in a deficit. And they're also actually doing very well if you compare it to the last couple of years. The last couple of years, during Corona, they were floating below zero quite a bit, but now, since around sort of 2021, mid-2021, they've really gone into the positive, so they are doing well in that area as well. Then another big one is the Bank of England. They released their interest rate decision. They also went up by 75 basis points, so they're sort of chasing the US a little bit. They were kind of forced to do this purely because they need to protect the value of the British pound. And if the problem, they sort of sit in a bit of a catch-22. If they increase it too much, they hurt the economy too much, which will cause the pound to drop. If they don't increase it, then the US dollar is too attractive, which means the investors are going to go there, which means the pound will also go down. So it's sort of a little bit of a slippery slope. It's finding that sweet spot where you're not actually doing too much damage, but the pound's still attractive, trying to find that balance. So if you look at the markets, it doesn't look like the market's like this at all. The pound has fallen quite a bit in relation to the dollar. The dollar, after the interest rate decision yesterday by the Fed, has gone up quite significantly. Then there was an unemployment rate released in this is the euro area, the unemployment rate in the general Europe area. That has gone down, which is actually a good thing. It's not like in America you want it to go up. So it's the two different parts of the world. In America we want it to go up because the economy needs to slow down. In the EU we want it to go down because we want more people to be employed to actually be able to afford a living, because in the winter there's going to be some really living is going to become very expensive. So you want as many people to be employed as possible to be able to afford living. And yeah, that's basically it. Other than that, Australia has also released the balance of trade. So it seems like it's balance of trade day to day. Australia has been doing really well. They're sitting on a positive of 12 billion. That was the figure released now. But they've also, in the last like 5 years, they've just been positive all the way. They're really growing quite significantly. So they're really like investing a lot into manufacturing. So yeah, maybe a place to look at future investments, because we know Australia is also a pretty stable place, but their balance of trade looks good. So that's maybe a nice place to start looking and focusing and doing some research and seeing if it's a good place to put your money. Okay, let me see. Yeah, that's basically it. If you like this content, remember to press the button. If you want to see more, remember to subscribe. This is Steve. Until next time, ciao.